right, so passive investing has been gaining popularity in the last couple of years. However, passive funds have officially made their way into retail portfolios in 2022 as big mutual fund houses have started to prioritize passive investing and are coming up with new investing strategies in this space. Now, as a result, the asset managed by the passive funds have skyrocketed in 2022 so far. To discuss more on this, I'm joined by Niranjan Avasthi, Head of the Product, Marketing and Digital Business, Edelweiss AMC, to understand the robust growth in the passive AUMs. Niranjan, welcome to the show. Good evening. So, till December end, as in December 2021, we had around 225 passive funds. Now, if we look at the figure, which is of July 2022, we have 278 passive funds already enrolled, which means 53 new passive funds were launched. What, according to you, is the reason behind this gaining momentum of passive funds?
Hi, everyone, and thanks, Kavita, for having me today. The reason is very simple, Kavita, that in India, the awareness about mutual fund is on rise. So there are a set of existing investors and a set of new investors also coming into the mutual fund industry. Now, passive is a very, very important part of a portfolio. Most likely what we have seen is the existing investors in mutual fund who have been investing for many, many years, as well as new investors who have entered in last 1 or 2 years, are also liking the way passive funds perform, the way their simplicity in terms of how simple it is to choose, monitor, and invest in them. Also, what's happening in the Western world is also triggering some amount of awareness about passive funds in India. And of course, a lot of AMCs, including us, spreading that awareness and, making people aware that passive also needs to be part of your portfolio, whether it is in equity or debt, is actually creating a flush of, money flowing into passive funds, as well as, new schemes being launched in the industry by many, many AMCs.
The trend that we are witnessing right now, and as very nicely and aptly explained by you, are we also talking about active funds leaving out this team which was there earlier? You think people are liking the return from passive funds more, and somehow the trust factor that goes into investing in an active fund has gone down, or you think it's just a new trend that we are seeing or witnessing?
So there are, as I mentioned, there are 2-3 reasons. One of the reason is, the falling alpha in active funds. Maybe in some categories like large cap, it is visible over the last 3-4 years, where the alpha has been shrinking, where investors are, opting for passive funds as far as their large cap allocation is concerned. The second is also the cost. There is a lot of awareness about cost in India, while even our active funds in the direct plans are very, very competitive in terms of cost, but people are also, maybe moving into passives because of cost consideration. And the third reason is also, it's very simple for anyone to pick a passive fund, whether it is a large cap allocation. He has not many choices, maybe Nifty 50 or Nifty 100 or BSE Sensex are 2-3 options to choose from. So the choice paradox which comes in when an investor is himself trying to pick from an active fund. In passive, that choice paradox is not there. So I would, partially agree that falling alpha in the large cap space or some of the active funds could be the trigger. But the larger reasons are also maybe the lower cost, and most importantly, how easy it is to select a passive fund and maintain in one's portfolio, because you don't need to review, it doesn't underperform its benchmark, or you don't need to see the cyclicality in terms of performance versus the benchmark or the underlying benchmark, which the passive funds is following.
Let's also consider a global scenario. Now, in the US, we've seen passive funds are seen to be detrimental to the market as a whole. Now, do you think, fine, for investor, it could be a good choice to place a passive fund in their portfolio, rebalance it, and accordingly align it with their goals? But the question over here is whether it is good for the entire market as a whole. Now, this trend, how do you see it impacting the market?
So there are many theories which says if passive funds as a universe becomes very, very large, it may create some disruption in the market when they rebalance and all. Nothing has been proved till now, but I think so. My personal belief is you need both active as well as passive funds for a right balance in the market. If any one, overpowers the other, there could be imbalance, especially in passive. There are theories which I just mentioned. So, and I think so that itself, the rise of passive funds itself can create opportunities for active fund managers to generate alpha. So it has to be a balanced play between both active as well as passive as far as markets are concerned, in my view.
Also, talking from an AMC's point of view, help us understand the kind of market you are looking at when we talk about launching NFOs for passive funds and the kind of innovative themes AMCs are coming along with. What is the latest guideline given by Sebi also? Because there is a relief due to which also we are seeing so much of swelling when it comes to passive funds launch.
Right. So there are a couple of things. One is within passives. If you see over the last 1 year, clearly debt passives has grown at a very, very fast pace. Since the time the launch of first target maturity by Edelweiss, which is Bharat Bond ETF program in December 2019, we have seen almost 25 to 30 passive funds, debt funds launched only in this target maturity category. This category itself has grown very, very fast in last 1 year or so. And that is where, large number of funds are being launched by the AMC. On the regulation part, Sebi has allowed a fast track launch of passive funds, which means there is a normal route where you file your product with Sebi. It takes maybe a month or so to get approved, and then you launch. There is a fast track mechanism where Sebi is also encouraging AMCs to launch more passive funds in a very faster way, and a quick turnaround is being provided where you can get the approval and launch the passive fund very, very fast. While we haven't seen many launches under this fast track recently, but I think so over the next couple of months or quarters we will see lot many AMCs opting for this and launching quick launches of passive funds over the next maybe quarters or so.
So, so far, if I just want to analyze the kind of inflow you've been seeing, now passive also has ETFs and index.
Yes.
What kind of category, according to you, is actually attracting investors more? Which category do they understand very well and are willing to invest?
Right. So clearly there are two categories at a broader level. One is equity, one is debt. Debt, as I mentioned, is a category which was recently introduced to the market, and industry is just testing the waters. But within a span of just 1 year, the debt passive, which is largely dominated by target maturity index funds, has grown substantially. As we speak, this category itself is close to 1 lakh crore today. So this category is clearly seeing a lot of interest from investors because target maturity funds are very simple. They aim to give a FD-like experience where you select a maturity in line or as per your need. If you want to invest for 3 years or 5 years, you select a particular target maturity index fund, invest in that and just forget it. You don't need to analyze debt market, which way the yields will go. So it's a very, very simple and easy way to participate in debt markets. Most Indians are tuned towards investing in FDs. So these target maturity funds are kind of giving a FD-like experience while the returns are not guaranteed because it's a mutual fund end of the day, but there is a certain amount of visibility. There is a certain amount of maturity which is there, which matches your goal. And clearly investors are liking this segment. Apart from that, normal equity passives are also continuing to gaze, continuing to see a lot of inflows. Most common index funds, be it Nifty 50 or Sensex or Nifty 100 or Nifty Next 50 for that matter, are clearly seeing consistent flows from retail investors and HNI investors. But to me, the fastest growing category where more and more investors are jumping into the market is clearly debt passives over the last 1 year, which we have seen.
What about FOFs, if you talk about international investing through passive way?
Mm-hmm. Yeah, so that international investing, if you see last 2 years, in fact, from 2020 till 2021, and there was a huge inflow in international investing. People were looking to diversify their portfolio outside India, and a lot of AUM, a lot of investors came into these funds. In the last 6 months, unfortunately, the limit got hit, and some of the active funds in this category could not, take inflows because of the limit. At the same time, there is a separate carved out limit for international passive funds or FOFs investing in passive funds outside India. Over there, we are seeing some inflows consistently, because now that is the only option which is available for investors who want to invest outside India. So that is the reason why this category is seeing some traction. However, if you see the inflows compared to domestic passives or debt passive, this is very, very small.
So Niranjan, now what happens is, the market cycle changes and we see a new type of investment trends coming up. Do you think this passive theory is also one of those kind of trends which are now, because a lot of experts, we keep talking throughout on the channel also, a short to medium term horizon could be difficult for fund managers to create alpha, to generate alpha, which is also the reason why we are seeing a lot of passive investment interest among the investors. But do you think this trend is just for now and you don't see it sustaining, or you think this could be we might just follow the global line or the US way of investing?
So if the reason is only alpha, then I would agree with you that this could be a short-term trend, because as far as Indian market is concerned, there is a huge opportunity for fund managers to generate alpha, and we are already seeing it some of the multi-cap, flexi-cap, mid-cap or small-cap funds. But I think that is not the only reason why people are investing in passive today. The reasons are also beyond just alpha. One is, simplicity. As far as debt is concerned, which is the fastest growing category, people are not worried about alpha, but the product structure itself gives a lot of simplicity and ease and visibility of returns to investors. And that is the reason they are flowing into it. And if that alpha is not a reason, I don't think it's a short-term phenomena where investors are flowing into this asset class and then will move out. I think so. This is just a start. It will gain momentum and it will, continue to see this traction if investors are investing for the right reason, which is simplicity, to some extent cost, and also diversifying that portfolio, where one part of their portfolio is creating alpha through active equity, and one part is just giving you market beta exposure at a very low cost and in a very simple way. So in my view, a simple answer would be this is just a start. It will continue to gain traction, and this category will definitely grow much larger from where it is and what it is today.
AMC has in pipeline when it comes about launching new passive funds, and what is your preparation like? Are you coming up with some interesting and innovative themes which you regularly do?
Yeah, absolutely. So as I mentioned, clearly on the debt passive side, Edelweiss Mutual Fund has been focusing. We were the first to launch Bharat Bond ETF and introduce target maturity. We have launched a couple of target maturity funds. We are coming up with a 14 or 15 year segment as far as target maturity is concerned, which will be the first time in the industry, which is 2037 maturity. No one has seen that as far as investors concerned. They don't have option to invest in that longer term maturity. So we are coming up with that. Plus there'll be a couple of more target maturity funds. Also, we are working on some innovative debt passive strategies, which you will definitely see over the next coming quarters. As far as equity is concerned, we are already working on creating a pipeline where all smart beta as well as normal index funds will be launched over the next 3 to 4 quarters.
Right, so that will be all. Thank you so much, Niranjan, for being a part of this show and helping our investor understand the importance of having a passive fund in their portfolio. And thank you so much for revealing us your upcoming plans in terms of launching passive funds. Thank you so much for being a part of the show. But then it's time to slip into a short break. And after that, we are going to secure your online behavior. We are going to talk about cyber insurance exclusively on the ET Money Show right up after this break.